30th of April. I'm Andrea Behidi. If you haven't watched me so far, a market analyst here in Hot Forex. So a quick briefing actually, just to see together where the market is standing and also the reaction of the market on the key event of the day, on the highlight of the day, which should be out on less than 5 minutes. And I'm referring to the US inflation. So today we're gonna go through the charts as usual, okay, and see whether the so anticipated event would actually make any reaction or could emerge or could surge, sorry, as it's widely expected. So just a quick summary. Let me just confirm that you can see me. Because I'm quite worried about about the social media. Sometimes we face some problems, so I just wanted to make sure that you can hear me and see me loud and clear. Okay, YouTube works fine, as I can see. I hope that Facebook works the same as well. So, okay, so as usual, a quick briefing of what's going on, and I will start with what is expected from inflation in 5 minutes actually. So the forecast actually are widely expect to the inflation to actually spike higher. So we are expecting the inflation report to show today an outsized March gains for inflation and for trade prices as well. That's why tomorrow's data, which is retail sales, is also expected to surge, as I said. So it's a big week from event perspective, at least from the US. Okay, so inflation, as I said, is expected to surge. Is expected actually to climb to 0.5% overall and 0.2% just in February. So you can understand that if we get actual what is expected or in line forecast, in line the results with the forecast, or anything above that, this could support further the recovery scenario for US economy and could actually strengthen more the optimistic side of the market. So it could strengthen dollar traditionally. Good data, strengthen the currency of the country. So this is what I expected. I cannot tell you, Rabos, right now whether it's dollar up or down. What I can tell you is, let me just also have my MT4 on. What I can tell you is that for the time being, it has been a bit firm ahead of the data. So I rebounded early in the morning in the European session to 92, close to 92 area, but it remains supported ahead of the data. So it will, we can really have a clearer picture after the data, because for the time being, it was like a bit firm ahead of the anticipation, ahead of the caution. Actually, is the best word for today's trading, ahead of the caution mode that it was sustaining so far today. Thank you very much for your nice comments and words, guys. So it's your session once again. Let me know if you want me to particularly analyze a specific asset, and I will try to search it for it and do the best I can from analysis perspective. So this is your session, and I would like to see any questions that you have, and whatever you need actually. Okay, so let me just quickly inform my head. Okay, let me share with you the calendar. So we are following the news together. Okay, so let's quickly shift to the calendar. Is the calendar? And come on, Andrea, share the calendar. And here we are. Excellent. Okay, guys. So, it will be out right now. Let's see how is it doing. What's the results? Are they already out? Not yet. Okay, well, let's wait a minute. As I said, it is expected to spike higher. This is something that could support further the optimistic side of the US economy, the recovery scenario. As we're moving towards in a very, very strong production of vaccination in the US, and 1.6% for March on a yearly basis, 2.6 in a monthly basis. For March, the overall inflation number. So that was excluding food and energy. The monthly one, 0.3%. So actually, and based on Forex, on the FX Street anticipation was 0.2%, but I have seen a lot of analysts expecting 0.3%. So this is in line or even higher than the majority of the expectations. And the monthly basis, and the monthly one for March, 0.6% higher than expected. But what spreads more the optimism around the inflation in the US economy is the fact that it's higher than February. So you can see growth over here. The yearly overall number from 1.7% that was last month, it came up to 2.6%. So this is expected. Let me stop sharing the Chrome, Google, and let me quickly shift to MT4 to see the reaction of dollar. So it should be actually, we should see a strong reaction, a strong support from dollar, because it was indeed a strong and positive data from US. So excellent, here we are. So let's see. So we had a jump that will move the 30 minutes chart. We had a jump higher, 90 to 35, quickly turn lower. So there is a bit of a fight between bulls and bears over here. So we need to wait a bit for the asset to calm down. But what I would like, first of all, to clarify, guys, is that this is indeed a good report today, okay? So indeed, we have seen the inflation coming higher, the core prices coming higher as well, the overall prices, the overall report coming, posting a nice increase, the core price also showing growth to 1.6%, and this is something that traditionally, okay, any kind of a lift in inflation figures, okay, is something that traditionally lifts the currency, but also is very is correlated with commodity prices. So such numbers are actually being supported by commodity prices. So you should know that the headline inflation figures are actually being lifted by a commodity price updraft led by energy, so oil, gas, and etc., and big trade price gains. So this is what we're getting actually. The spike that we have seen today in inflation, in the headline inflation, so headline gains, core gains, all these are being supported, are being pushed by commodity prices, by the higher commodity prices led by energy and big trade price gains as well. So what this brings, why this is important? This is important because the inflation is actually caused the climb into the second quarter. So this is giving more optimism for the second quarter for the US economy. Okay, so this is why this is so important. That's why it's also the next key event of the week is retail sales as well, because if they're doing great as well, if they show some kind of a growth as well, then we might see another jump because higher retail sales are really already priced in, but nonetheless they suggest that there is not there is not so many risks like Fed reported last week. Okay, so it really strengthens the positive outlook and ignores the downside risk in the US economy. Okay, so keep an eye on tomorrow's retail sales as well, and you should have in mind that on top of all this, the what is like sustaining in the medium term, the optimistic side of the market is also the rising vaccination numbers. Okay, so let's get back to the markets. Okay, let me double check whether there is anything that I should have forgot about or something. Okay, not for the time being. Okay, so let's move on to dollar. So which is okay, it was initially largely unmoved. You can see that it was consolidating prior to the data. Now it's turning lower, but it's just 5 minutes after the data, so um, we cannot really rely on this decline. Okay, you should wait a bit for the markets to calm down, but what we can see in the near term picture, very short time frame picture, is that after it rebounded on the yesterday on the opening, actually yesterday, remains in some kind of a regression up channel. So very short time, very short near term support is being held at 92 10 or even the round 92 area. Okay, but I will shift to something else until the markets are a bit calmer after the data, because because as I said, this is a good report, so we need to wait to see whether this is just a drift with market participants trying to push the dollar lower in order to buy at a lower price, because from fundamental perspective the data are very good, very strong. So okay, we have seen a bit of a pullback, 92.13 for the time being. Let me just start with your questions instead until we gain some time to see a nicer, calmer markets. So, Chet, I ask why this affect the US tech. Okay, guys, is the start of the. Let's actually shift until this is. We've seen a big drift. Let's see whether it will find some kind of a support on 92 until we get back, because we're just 7 minutes after the data, so it's still a bit of a very volatile session right now. Let's shift it a bit to Nasdaq, which is a heavy weighted tech stock. So you asked why this affect the US tech. So it's not necessarily the inflation data that affect the US stocks. I'm afraid they are Jedi. Okay, so it's an earnings season. I would like to remind you that this is the very first week of earnings season. So we from now onwards, we're gonna see big giants, tech companies, banks this week reporting their earnings for the first quarter. Okay, so this is something that also could weigh a bit on the US tech stocks, but also the treasuries ahead of the CPI report, again, ahead of the inflation report, we have seen the markets being very anxious, right? And that is something that drifted treasuries lower. ahead. So it was a bit of a positioning ahead of the release. So pressuring treasuries lower supported temporarily the dollar, but on the flip side, it also weighted on the US stocks. So even though the European stocks were doing quite great today, however, the US future, the US company stocks, the US technology companies, they remain a bit mixed ahead of the US inflation. It's just a positioning ahead of the inflation. It's just a lot of uncertainty. This is why we have seen a bit of a mixed picture, and why you're asking me why it's affected. It's not correlated directly, but it's a bit of like it's all about sentiment. The market, the majority of market participants remain a bit. They even remained outside the market, or held some kind of more eased and less aggressive positioning in order to wait for the data to be out or to get out. So it's not necessarily correlated with the US inflation, Okay, so but since you ask about the US tech, I'm not sure whether you're referring to. I assume that you're referring to technology companies. Okay, if not, let me know. Something that also might provided some kind of a ceiling to the techs, other than the start of the earnings season, other than the inflation. Also, we had seen overnight China actually was yesterday, if I'm not mistaken. So there was a penalty, we'll say some fee from the Chinese regulator against the Alibaba, one of the biggest technology companies in the world, right? Even though Alibaba didn't really affect it, the Alibaba price wasn't really affected, but this might have been one of the things that actually spread a bit of the uncertainty from the tech for the big tech companies. But mainly is the inflation fears, because it's the hot potato of the year, the rising inflation, along with what's going on in the treasury yields. That's why I keep saying day after day since the beginning of the year that, guys, you should first thing that you should do every morning is check the treasuries, because if treasury yields moving higher, okay, dollar is moving lower. So we have stocks that are moving higher as well. But if we have treasury yields moving back down, stocks, if treasury is moving higher, dollar is moving lower, stocks are moving lower. If treasuries are moving lower, dollar is strengthening, stocks are strengthening. So these are correlated. So what is affecting the US stocks, either technology ones or not, is the treasury yields. Okay, so have this in mind. And we have seen lately the US and China tension rising, a lot of delisting and etc. So this is something that weighs on the technology companies as well, along with what happened with Alibaba. I think was yesterday, if I'm not mistaken. So China fines Alibaba for antitrust moves, and that was actually a big amount. It was around $2.17 billion. Okay, so that was it in regards to the stocks. But let's see the technicals, however. The Nasdaq is doing quite great. Actually, is retesting once again the high that we have seen like in the mid of February. Okay, So Nasdaq higher after that consolidation, after that struggling that we have seen on Friday and on Monday as well, yesterday as well. So it's strengthening. I assume this is due to the inflation, to the jump on inflation at 0.6%. So higher, retesting the 13,900. So this is also because because also the robustness, the signal of a robustness of the recovery. So let's actually zoom in a bit to see what's going on. So you see, it was really struggled sideways, but it boosted on the data. So if it managed to break, so you can see that it was in a rally since the end of February, right? So however, this is a key resistance area to be seen, my dear Jedi. So this was the previous record highs, right? So if it breaks that level, if it breaks the 13,902 level, then the next level to be watched, it's pretty much based on the Fibonacci extension, okay? So the very next one, the very next key level to be seen is 14,900 or even the 15,000, just to round it up. But if we need a near-term one, what could really help us is pretty much the Fibonacci level extensions, okay? So, and that brings it back into attention the 14,200, or even, because this is a weekly chart, if you are really in a, sorry guys, so if you're really an intraday trader or a short-term trader, then you should apply your Fibonacci extension on the later swing. Okay, so that was broken. 13, the previous resistance has been broken already. The 100 Fibonacci has already broken. So the very next one is either on the mid of 100, between 161. So that should be around 14,000, not even higher. Or the very next one, it will be 14,450. So you should play a bit with the Fibonacci numbers if it managed to break that previous record highs. But I would like to let you know, I would like to highlight how strong the positive momentum is in the daily chart. So we can see that the overall outlook for Nasdaq, for the tech heavy stock index, it's mainly positive. So the outlook, the medium term outlook, is positive. You can see how strong these MACD lines are. RSI is pointing upwards slowly, but still above the 50, extending higher, and like just a breath below the 70 barrier. So breaking, a closing, a decisive break actually above the previous record highs could lead us to search for new resistance levels. That was on Nasdaq. I can say thank you from my company over here, but I don't know what's that. Okay, dollar Swiss, of course. Okay, just give me a minute to have a look again on dollar, what is going on over there. So spike lower. Let me just see the headlines, whether I missed something. And perfect. So okay, we have actually a lot of a thumb reaction, I will say. So even though initially the dollar actually strengthened, that like it's supposed to, on the warmer than expected headlines and core prints, it quickly reversed. So we can see over here the dollar yen initially spiking higher at 109. nearly 60, and then quickly turned down to the lows of the 109 territory. So we have, in the meantime, we have equity futures mixed above their lows, even though Nasdaq is higher. Yields ultimately ticked a bit lower as well. So very, very choppiness in yields around the stronger than expected CPI. So as I said, a very tame reaction. So what I could tell you, you can ask me, Andre, what's going on? Why is not being supported? This might be actually Fed's fault and ahead of the retail sales, but mainly Fed's fault. What this looks to be is that Fed has done a good job in preparing the markets for the surge in prices, convincing that most of the uber accommodative policy stance will be left in place despite the improving, recovering, rising inflation. So what I'm trying to say in simple terms is that this data might have already been priced in. That's why now we are seeing some kind of a sell-off, because Fed since last week looks that they have done a good job and prepared the markets that this is going to be a very, very good and strong release due to the accommodative policy stance. And now this was already priced in, and now we have seen that instead of being further supported, the dollar is drifting lower, maybe catching some kind of targets and turning lower, some kind of a selling off over here. So you ask about dollar yen. So dollar yen. So it remains below the pivot point of the day, the 20-hour moving average, retesting the first support of the day. So it remains pressured. It remains under pressure so far today. Even though it was a bit ups and downs between the 109 lows, 109 highs, but this aggressive sell-off in the during the Asia session, due to a pickup on dollar, due to the treasuries as well, held the asset below the pivot point. So we had a bit of a jump on the data, but it quickly turned lower, spiking the first support of the day. However, it's still above the first support of the day. If we see a support over here, along with a break and a closure, an hourly closure above the pivot point, we could see something similar with what happened over here. So we could see a retest of the first support of the resistance of the day, or even the high of the day. But we need to get back above the clash over here of 20-hour and pivot point level. So back above the 104, 109.45 at the top of the hour, or in a confirmed close of an hourly session. That was on yen. Overall on yen, since you asked Bonnie, the overall picture remains positive. It slowed down, indeed, it slowed down the last 2 weeks, but it's been well supported above the 109 area, or even better if you prefer, above the 108.70, which is the latest lower fractal. So as long as we don't see it turning below 109, remains in a positive outlook, but in the near term, a bit of a consolidation around the 20-day moving average. So struggling for 4 days in a row to take any kind of direction, okay? Overall positive, but in order to take any decision, either to the downside or to the upside, we need to wait for any breakout of key resistance and support areas. So which are these ones? First of all, the key resistance to the upside, key resistance is the latest up fractal in the daily chart at 109.95, just 5 pips below the 110 area, because this is the latest up fractal, is 1, 2, 3, 4, 5 days resistance, but also confirms a closure above the 20-day moving average. While on the flip side, if it managed to break the 108.70 territory, which is below the latest low fractal, then this could turn the asset even lower to the 108 territory, 108.10, or even the around 108, which is just like close to the lower Bollingers, the floor that we had in March, and so on and so forth. So keep an eye on these two key resistance and support area. That was on yen. Let's move on. What is with UC? I guess you're talking about $1. I guess. I'm not sure. You asked for it again, Primo, right? And I was you tend to confuse me with UC. Let me check if I have UC over here. UC. Hopefully you're not asking about dollar Swiss, but you're asking about, Bonnie was asking about dollar Swiss. Sorry, I missed that. Dollar Swiss. Here we are. So dollar Swiss had actually resumed quite aggressively on the data, a sell-off, retesting the low that we have seen on yesterday actually, and this is a key level to be seen. Why? Because it's a support that has been sustained for the whole April and March. So 0.9210 and even better 92, a round number, is a key support level for dollar Swiss, which if it breaks, okay, then it's pretty much it could find actually more selling pressure if it breaks down to 91.10 or even lower 99, not 90 area. So why is that? I had a Fibonacci level since the top over here 2019. So the asset managed to recover around 50% of the last 2 years decline, but since it managed to do that, it turned aggressively lower, okay, reversing back the 20%, around the 20% of that. So 92 is a key level to be watched because it's a more than a month support. It could open the doors, first of all, on the 23.6 Fibonacci level, which is also coinciding with 200-day moving average. So if 92 breaks, key level to be watched will be the 0.9120, which if it breaks, it could take us down to the previous low and then 0.90 or even worse 0.88 level. This is the long term. Intraday now, the floor 92.10 or even 92, a stronger support area, 92 round number, remains intact. However, let me put the 5 and 9 level over here. We have seen a sharply lower, breaking the 20-hour moving average. This is the hourly chart, my dear Ebony. Breaking the pivot point, breaking the 20-period moving average, and the fast MAs like bearishly crossed. And this is a big candle. So another 2 minutes left for the top of this hourly candle to close. But this is a strong hourly candle, a strong negative hourly candle. Okay, so we might see further boost to the downside, maybe down to the first support of the day, which is the 0.92. Since this candle is very, very big, and that suggests a lot of bears entering the dollar yen, okay? So Yeah, that was in regards to dollar yen. But 92 is expected to be strong support, so only a break below that could brings back to the attention further decline. Okay, okay, that was it for Swiss. Are the news found in the Hot Forex app? Of course, the Hot Forex app. Cannot really show it to you right now because I'm not from the mobile phone, but I'm from the desktop. But let me just. I shouldn't do that, guys. But yeah, the HF app. There is a menu. Okay, there is a menu as well. Okay, looking like that, if you can see. So there are tools over there. Every single tool that we have in the actual website, there are there. So over there you can see the economic calendar, so the news are there. If you don't really like the economic calendar, you can click on the market news, and over there is an update every minute that something happens. So it's instantly updated. So if you click on the breaking news, you can see that what's happened. For example, right now I can see just now gold regained traction, test 1740. Inflation spike high, raised to 1.6. So you can see all these headlines over here. Every minute is instantly updated. So yeah, Jedi, breaking news on the menu, either economic calendar. Okay, hopefully that helps. So yes, let's go to gold, Aussie, silver, and ZAR. Okay, of course, why not? We can see that the sell-off in dollar continues. So let's start with Aussie. So Aussie, okay, it dipped down initially, but it turned higher, back above 0.76. Not a strong momentum, I'm afraid, Muzi. The momentum is very, very choppy, very close to neutral, within the range that we have seen since Friday. So as long as we don't see a break of the today's high, or even better, this double top that we have seen at 0.7640, either a break above it or a drift below the 0.787580, like to exit the asset, to exit, to break that ranging market, the consolidation mode, then consolidation it is. I mean, it remains in a choppiness, in a sideways movement. You can see that momentum is not helping either. It's very, very close to neutral. So consolidation remains unless we see a breakout either above the 0.7640 or below the 7580 level. So yeah, you can see in the daily chart how choppy sideways the Aussie is. So we need decisive moves, either down or up, to have a clearer picture of where the asset is hitting to. Now, if you're not interested in the daily chart, you prefer the intraday picture, I will zoom in the 30 minutes chart and tell you that we had a nice bounce, bullish cross from the fast moving average, breaking of 50 period moving average, bullish cross from stochastic, but there is a big fight from bears. Bears are still there. You can see that momentum, we can see that from momentum, because RSI and the MACD haven't really changed. They are still close to 50. So this bounce looks to be temporary since the momentum indicators are mixed. So it might retest the 0.76 and struggle again to overcome this barrier. So hopefully this helped. Now, you asked also dollar ZAR. Okay, fair enough. Let's move on to dollar ZAR. Let me drink a bit dollar ZAR. Dollar ZAR, I cannot spend time to find, and I will just drag and drop it. Okay, excellent. So, okay, so I will start over here. So overall, you can see a lot of consolidation so far this year, since December from dollar ZAR. So you should, the first thing that you should have in your MT4s is MT4s or MT5, whatever you're using, is this consolidation, this ranking market with this key support resistance midlines for ZAR, because this, depending on where the ZAR is standing, these are key resistance or support areas. So for the time being, is at the lows, is at the lows of the 2021 level. So if it rebounds and break the 20-day moving average, then key level to be seen is the midline over here at 1491. If that breaks, the next resistance is at 1531. If that breaks as well, then we have that top over here, double top at 1560 territory. So this is the overall picture. Have these key resistance and support levels in line, because they will help you identify the next target area, okay? So consolidation it is, RSI below 50, MACD below neutral, negative, but because there is a clash of signal with the histogram, it confirms this consolidation. So overall picture, neutral. Let's shift to the intraday picture, which rebounded since the European session. And let me put my 5 and 9 exponential moving average. Rebounded, bullish cross like 3 hours ago, breaking the pivot point, breaking the previous up fractal, retesting the first resistance of the day, posting a new high, but turning quickly down. So you need to be very careful over here, because even though we had a strong rebound, breaking even the first resistance of the day, and we have a strong tail over here. The fact that even though it boosted higher, but end up closing very close to the open price, suggests indecision and suggests strong bearish pressure. So this boost might run out of steam. Why I'm saying that? Because RSI has flattened. This is a strong doji candle. MACD hasn't turned positive. The signal line remains in the neutral zone. So it might fail to extend again to the upside. Let's shift to the 30 minutes chart to see what's going on over here. So up, posted a new fresh record high, turn aggressively down again, and remains around the first resistance of the day with fast MAs. Instead of pointing upwards, they point right. So since they point right, that means consolidation. So after these sharp moves, we might see this rebound running out of steam. So take care. We need to wait for a confirmation over here, okay? So you also ask about silver and gold. Okay, let's shift to silver and gold. Silver and gold. Okay. Just to highlight, guys, that other than the positioning, the pricing of higher inflation, another reason another reason of the dollars, how can I say that? Of the dollars decline, okay, even though the inflation was higher than anticipated, it was the fact that it was less of what was expected, okay? So it looks that the markets wrapped up the risk around inflation, okay? And even though they worried about they worried about higher treasury yields again, that's why we had this weird reaction from dollar. Even though the inflation was higher than expected, it was that it was less than feared. Okay, so and because yields turn lower after the data, then now the dollar is slumping significantly across the board as well. So I was about to check gold and silver, right? Gold and silver. And here we are next to each other. So gold is actually rebounded on the dollar weakness, okay, on the falling yields, falling bonds if you preferred, higher treasury yields, but lower dollar. So jumped higher, 1742. Retesting the first resistance of the day, actually posting more than $19 spike over here. So away from the first resistance support of the day, jumping higher, strong hourly candles. So a bit of a reversal of more than 50% of the declines that we have seen since 8th of April. So gold reversed some losses, take some ground, gain some ground, okay, because the renewed dollar weakness is what has provided a boost on gold over here. So next level to be seen will be the 1745. Why is that? Why is not the second resistance of the day? Why is 1745? Because it's the latest up fractal for those that are intraday traders. Okay, so we have some kind of a sharp U-turn. Can you see? It looks like a U pattern over here. Okay, boosted by renewed selling on dollar after the inflation. So next to be seen in order to fully form this U shape is the 1745. Okay, the next level to be watched. Now, strong support remains the 1723. Let me confirm whether you can see me. Yes, you can. So can you see this U shape? Hopefully you can. So yes, let me continue what I was telling you about. So yes, nice rebound. And if I just what I would like to do is can you see this is a 4-hour chart? Strong rebound, reversing nearly all the yesterday's and some of Friday's decline as well. So next level to be watched will be the 1745. However, okay, that doesn't really change the overall picture of the gold. I will not, however, discuss about the overall picture. We'll stick on the 1-hour chart. So if 1745 breaks, next level to be seen will be the highs, Thursday's highs, and the 1750 area, 1750 to 1757. Now, if it struggles to extend to the upside, because you can see that RSI turned above 50, MACD decreased the negative bias. Let me just show that to you. You see, RSI broke 50, MACD, even though it's still negative, it's actually suggesting decreasing negative bias. So there is a lot of steam for further boost. So keep an eye on 1745, 1753, or even 17 58 levels for the day. Okay, this is for the day. If you see it turning low, and also we had a bullish cross of 5 and 9 over here. Okay, another thing that strengthens the positive intraday outlook. Okay, so now if for any reason struggles to overcome this area, the 1742, 1745, because still we're just 14 minutes into the new session, hourly session, if it failed to break that level, a pullback could find support at 1730, 1723. Yeah, that was on gold. Let's move to silver. Very similar picture, managed to regain on the majority of Mondays and Fridays gains. Similar reaction, you can see that. But what is different with gold is the fact that it managed to break the week's highs. It managed to, the MACD managed to turn positive even though signal line remains negative. RSI cross 70, and let me check. Okay, fast MAs keep pointing upwards. Okay, so strong intraday boost with next resistance levels at 25.74 or even 25.60. Sorry. So the next levels to be seen for silver. Nice. So the difference with gold is the fact that the U shape has already been formed, has already been broken. Can you see that? It's already broken. So this is a bullish pattern, which on top of that we have fast MAs pointing upwards, MACD turning positive, RSI crossing 70, the asset breaking Fridays and Mondays highs, so a lot of increasing positive bias for silver intraday. So I think I have covered your question, Muzi. Let me bring Onyakashi on. New Zealand and pound Oz. Let's start with pound Oz. So pound Oz in a sharp selling. Aussie and New Zealand in general have been under pressure today, but we have seen right now that Aussie is gaining some ground against the pound. So even though Aussie was one of the weakest currencies today because of the selling of Australian government bonds, it quickly reversed lower again. It reversed and gains back all the losses that it has seen this week. However, there is some kind of an upwards channel over here, as I can see, which was already broken. So DR, let me put the 30 minutes chart, DR Onyakeshi, that's a good call. It just broken yesterday's level. This is a low. It broken my near-term up channel, broken the Bollingers. Fast MAs are sharply lower, pointing sharply lower, so there is a lot of selling pressure over here. While on top of all this, we can see RSI at 35 and MACD turning negative. So we're having a very strong selling pressure of Aussie against pound. So this actually suggests the strong selling intraday for pound Oz, with next level to be seen at Friday's lows around 1.7970. 79.70 is the next key support area for pound Oz. Okay. All the technicals, intraday technicals, are like adding further pressure on the pound Oz over here, especially if it managed to break up below the 180 level, 000 level. Then this could open the doors to 0.7970. The next level to be seen. Now, New Zealand dollar. New Zealand dollar. Come on, I had it somewhere. Here it is. So consolidation remains, I'm afraid, dear Onyakeshi. So this is the 1 hour chart. I could see this is the 1 hour chart. A lot of indecision over here. Up, doji down, hold support up, doji again. Okay, overall, it's under pressure. This is a daily chart. Overall, it's struggling to break the 20-day moving average, while it's recording another lower highs. Intraday now, so overall the outlook is negative for New Zealand dollar. Intraday is in a strong consolidation mode. So as long as we don't see a break of the 0.7050 level, which is the high, yesterday's highs, or a move down below the first support of the day, or more precisely 0.70, then consolidation remains. So what we mean by consolidation, like struggling on the highs, so a pullback on the highs, a potential pullback on the highs, and struggling to exit this support, so a potential rebound on the lows. Okay. Hello, dear Ali. Hello. Bitcoin. Bitcoin actually had a remarkable session. Remarkable. It broke the 63 level. Fresh record high today on dollar weakness. Fresh record high once again. Okay, my colleague saying that there is some kind of a problem with microphone. Sorry, guys. Sorry. Really apologies for that. I don't know what to do with my microphone. So, okay. As I was telling you, another strong session for Bitcoin, breaking the 63 levels on dollar weakness. So, another fresh record high for the day. Okay, and let's see the technicals behind it. But before we see the technicals, actually what sparked this boost, let me put the 1 hour chart. Okay, what sparked this climb on Bitcoin, according to Coinmetrics, of course, is the fact that Coinbase is set to go public tomorrow in a direct listing that could value the cryptocurrency exchange at as much as $100 billion. This is what boosted Bitcoin. So yeah, the major mover was the Coinbase listing tomorrow. Okay, so let's see the technicals. As you can see, okay, let's start with daily. There is some kind of something that worries me, dear Cal. This is a daily chart, guys. Something that worries me is the fact that we are seeing higher an uptrend, so higher lows, but if we check MACD, it's giving us lower highs. So there is some kind of a divergence over here that worries me a lot. Okay, so keep that in mind. We have some kind of a divergence between momentum with the actual price action. Okay. However, RSI keep extending higher. That was a strong daily session so far. So our eyes should be on how it will close tonight. If it has a strong daily candle, we might see further extension. If not, we might see a pullback similar to this one, maybe a profit taking or something, but we need to wait for the tonight's session to close. Intraday now, after this bounce with MACD positive, RSI above 70, it looks like that the asset is struggling a bit because it's unable to extend further to the upside. So it's time for a correction, we could say, intraday in this 1 hour chart, because it peaked at 63,248, but it's consolidating since then, with fast MA is pointing on the right hand side, RSI is slowing down a bit. So there is a bit of a consolidation for the time being. Further boost to the upside could be seen if it breaks that latest up fractal in this 1 hour chart. On the flip side, you should really take care of the near-term support at 61,900 or 61,888. Yeah, 860, which is the 38.2 Fibonacci level. This is the key support level along with the secondary resistance of the day. These are the near-term support, while resistance is on the top on the latest up fractal. That was on Bitcoin. We have seen about gold. Cannot tell you whether you should sell or not gold, I'm afraid, dear. Still buying, but struggling, but hasn't overcome this level yet. So let's wait and see. Hello, happy to see you again. It seems like I'm late again. I just saw you. Don't worry. It's a kind of recorded, so even if you miss something, once I end the session, the video is there. Just quickly drop your mouse and find the asset that you are interested in. Don't worry about it, Fufu. I need contact for customer service. Can't trade. Okay, dear. Can you send a quick email or quick email to our support team, or if you don't want email, then can you quickly let me help you a bit? If you okay, come on. So in our website, you cannot see our website. Oh. Okay, in our website, as you can see over here, okay, there is a live support tab. Can you see that? Live support tab. If you click on it, our agents will be able to help you. Hopefully you have seen this, Carissa, okay? Okay, they will contact you shortly once you complete this short 2 lines form, okay? So let's get back to MT4. Excellent. Okay. Dollar yen again. Someone is asking about dollar yen again. Quickly saying dollar yen overall consolidating around 20-day moving average. So key support 109, key resistance 107, 109.95. Only a break above or below that level could actually give us a hint of a clear trend. Overall trend remains to the upside, and fundamentals are supporting actually upwards move for dollar yen because of yield differentials as well. Japanese bonds have a wider spread with dollars, so with dollar bonds, so yield differentials are really support the continuation of dollar yen to the upside. But if you're not a long-term trader, dear Ram, then have in mind the key resistance and support levels that I have just taught you about. Right now, the asset is below pivot with fast MAs pointing lower. So next level to be watched, next support is the 109.10 and the 109 level. If that breaks, if 109 breaks, then the asset could drift lower to the second support of the day, or even the third support of the day at 108.60. Inflation is strong, but dollar is going down and down. Why? I have already replied to that. Apparently, the dollar dumped on the strong inflation because apparently it looks like that the markets have roped up already the risks around inflation and worried about the another leg higher for treasury yields. That's why we have seen a very contrast reaction from dollar, but also is yields. So yields are falling, so dollar is slumping, okay. But on the flip side is Fed as well, which, as I said, it looks that it has done a quite good job apparently. So despite the good inflation, the warmer inflation outcomes, it looks that it has the data have been overlooked, okay, and because they have overlooked, the treasury yields have pulled back some gains again, and this is something that supported the stocks, the tech stocks, especially Nasdaq, weighted, however, in the bond market and weighted on the dollar as well. So Fed actually did a great job apparently on preparing the markets, as I said earlier. So yeah, this is it. But also, guys, this drift might be temporarily, okay, because we're still getting a lot of positive news for dollar. So wait a bit for the markets to calm down to see whether dollar will continue weakening or whether it will actually be supported. Because as I said, other than the warm inflation, we have also other news. Even if market participants have overlooked the hot inflation outcome, we're still getting a lot of news, positive news from US, and I'm referring to the vaccination program. But since I'm discussing about vaccination program, I have just noticed in the breaking news website that I have over here that there is a report that US is recommending a pause. Actually, I will put that on for you to see it, because I might say it, but you might be unable to understand it if I say it verbally. So, guys, apparently, unfortunately, there have been some news that the US is actually pausing I want to show it to you. You see it. Just now, I realized that there were some latest news about vaccination program. So apparently, the US is recommending a pause in Johnson & Johnson vaccine program due to blood clotting issues, something that tainted stock market sentiment, and that might be a reason of dollar sell-off. That might be a reason why the date have been overlooked. So let me quickly shift to stocks to see what's going on over there. So that's Dow Jones. No, that is Nasdaq posted another high in 1390, but okay, it sustains a move over there. S&P is a bit mixed, ups and down, mixed below its highs for the day. And where is Dow Jones? I don't have Dow Jones, but very mixed picture. So something that weighted on the dollar might be also the news about Johnson & Johnson. Let's see. So yeah, might be another explanation, I'm afraid. Where did we left? We have seen gold. We have seen gold, guys. I'm happy to see you as well, Fufu. We have, yes, we have done that. We have done the dollar is going down and why. We've explained the reasons. DRSI, I don't have a personal, I cannot use my personal Instagram, I'm afraid, but you can contact me either at the Instagram, the Hot Forex Instagram account, or using our email address. So I will write it down. So you can contact me as well over here, okay? This is my email address and Stuart's, so it's only me and Stuart. So if you need something, let me know, okay? So the dollar doesn't seem to have strengthened against the pound, and I feel it's because the US has stopped their Johnson & Johnson vaccination to the report flow. Good job, Syed. I didn't notice it. I just saw my headlines. I didn't knew about Johnson & Johnson. So, okay. The pound is actually a very interesting cross. Why? Because first of all, the Johnson & Johnson apparently looks to weighted on the pound, on the dollar, sorry. And however, the pound against the dollar is like it was the least one that actually it didn't have significant spikes lower, but instead it found some kind of a floor. So neither an upwards movement, neither a downside movement, a bit of a more mixed situation over here. Why is that? If we ignore today's report, you should know, guys, that pound in general, despite this decline that we have seen since the mid of February, fundamentally is well supported. So the data in UK are doing great. The reopening of UK supports also pound. Seasonality support pound. So that's why we've seen this mixed picture from pound. Is the last 4 days, and actually the last since the end of March, is like stayed within a ranking market between 136 and 139, 38 area. Traditionally, pound is benefiting in April, but also the fact that UK economy has opened and the fundamentals, the economic data are actually stronger than expected, are supporting pound. But because we so far had a strong dollar as well, they kept it like a bit in line, a bit sideways. So in general, you should know that fundamentals support pound. But as long as we don't see a break of the 20-day moving average, and more precisely the 15-day moving average at 138.50, we cannot hope for a rebound, for a reversal of this downtrend that we have seen since March. Intraday, stuck actually. So keep an eye on the high and lows of the day as your key resistance and support level. But it looks like it that it will continue consolidating because Bollingers are flattened, fast MAs are flattened, RSI is flattened, MACD is flattened. So consolidation it is intraday for pound, I'm afraid. Replying to Jedi, thanks very much. You're very welcome. I'm glad that I managed to help you guys. Don't you offer copy trade? Yes, we do. Yes, we do. So if you enter our if you okay, if you enter our Hot Forex page, hotforex.com website, okay, you can go down to investments, okay, click on HF copy, okay, and you can find out everything that you want in regards to the copy trade program. If you need any help, let us know, or as I said initially, contact support. They will give you an agent specialized on copy trade and will be able to reply to any questions that you have, any questions in regards to our HF copy trade. Okay, so let me get back to my MT4. Cool, okay. Nice emojis, Yasin, thank you. Dollar CAD, okay, Primo, dollar CAD, okay, we have a lot, dollar Swiss, dollar one, dollar Czech, so dollar CAD it is, okay, dollar CAD, so sharp sell-off, ooh, okay, nice, sharp sell-off on dollar CAD, apparently. Canadian dollar is benefiting on weakness dollar due to the this stamp reaction on inflation, but also as we just noticed the report in regards to Johnson and Johnson. So dollar CAD down, retest actually breaking, reversing all the gains of the day, turning back very, very close to the pivot point of the day. Can you see actually my screen? Yes, you can. Perfect. Turning down, very strong hourly candles, guys, breaking the 20-day moving average. But what it mostly interested me is this, the fact that the fast MAs are ready to cross bearishly. So apparently there is a lot of selling pressure over here, and MACD also, the RSI turned below 50. MACD is still holding positive, but is actually clash with the signal line. So we might find support around pivot point. Because even though we have dollar weakness, we also, if I'm not mistaken, let me double check, we have also a bit of a mixed oil over here. So that is not really a support, strong support from oil. So let me check something. So turning down. So we need to wait for this cross to be confirmed in order to hope for further extension lower to the first support or even the second support of the day at 125.33. Now let's see the 30 minutes chart. Down, down, nearly a full body candle already posted the bearish cross. So there is further negative bias for the very tight short time frame. But yeah, key level is the pivot point 125.55. I'm afraid. So it's just 25 pips high right now. There is pressure, but this could be provide a strong support for dollar CAD at 125.55. There is a loss of traction in the oil, so that's something that weighing in the Canadian dollar. So this drift might find some kind of a support at the pivot point. If it breaks pivot point, then it might find some support at 25.35. So overall, there is pressure on Canadian dollar. So this drift might be limited, but for the time being, there is still strong downwards pressure due to the dollar weakness. Yeah, so keep an eye on the pivot and the first support of the day. Yeah, that was on dollar CAD. You're welcome. Hello, guys. Hello, team. Okay. Ooh, a lot of questions today. Okay. Dollar Swiss. We have seen dollar Swiss. Let me quickly just do it again. So sell off on the dollar strength, breaking the pivot point of the day, but keep sustaining. But the 0.92 is intact. So as long as we don't see a break of 0.92, this decline looks to run out of steam. Why? Because I have seen flattened Bollingers, MACD neutral, even though RSI it turned lower and fast MAs are pointing lower. However, the fast MAs are like flattened already, so this might run out of steam already. Let's see the 30 minutes chart. Sharp sell-off, outside Bollingers, extending lower. Yeah, we need to see a confirmed breakout of 0.92 level. It is in a sell-off. ATR is pointing to not 11 pips lower. The hourly around 13 pips lower, so it might retest again the 92 level before finding some kind of a support. Okay, so in the very short time frame, like 15 minutes, 30 minutes, remains under pressure, but elsewhere is right consolidating, while overall, as I said, key level to be seen will be the 91, 90, and more precisely the 200-day, 50-day moving average are 91.79. If that breaks, the next support will be down here on February's highs and lows. So well down. Okay. Euro pound. Okay, euro pound. Pound, as I said, is well supported from fundamental perspective, but that's not the case so far. So euro pound actually spiked a bit higher this week, actually since last week, but struggling to extend above the 30% gains from the decline that we have seen since December. So it's consolidating for 4 days in a row, with MACD signal line remain well below zero, and RSI a bit flattened. So a lot of neutral outlook in the near term. So we could hope for further appreciation only if it breaks that latest fractal 0.70 87, but more precisely at 38 level, to be honest. So 1 hour chart in the meantime, rebounding, strong up, a boost higher. Let me put the 5 and 9. 30 minutes chart, boost higher, posted a fresh high, retesting the 0.7810, but the fast MAs are like turning a bit sideways. So MACD is also, as you can see, signal, even though it's positive, the signal line is still at 0. RSI has slowly started turning lower. So this rise might run out of steam or is searching for correction or consolidation. Okay, so we might see it reversing back down or keeping a sideways move below the first resistance of the day. Guys, I'm running out of steam. Sorry, I'm a bit tired. We'll finish with the last few questions. Dear, I don't use TradingView because we have Hot Forex MT4 and MT5, so I'm quite happy with them. Okay, so gold, as we said, sharp rise. Oh, broke my key resistance area. That's nice. So posting a new fresh high. So the outlook for the near term picture for the intraday is turning higher, guys. So that's a significant breakout from gold. So the next resistance areas to be seen are up here, because these suggest a reversal of more than 50%, even 61% of the decline that we have seen since last week. So strong, decisive moves over here. Whoa, that's impressive. So yeah, apparently a very strong 4-hour candle. Boom. So yeah, key resistance can be found on more than 2 months, more than 2 months resistance at 1758 for gold. Keep an eye on it. Okay, boom, strong hourly candles. Nice. Crossing, Bollingers are extending, fast MAs keep pointing upwards, reversing more than 16% of the decline that we have seen in April. Yeah, next level to be seen are the highs that we have seen on Thursday. Keep an eye on gold. Gold has broken. Yeah, thank you for telling me that. Do you see a rally in S&P 500? So S&P 500, actually, it's an earnings season. So because we're anticipating a strong earnings report, because of the reopening, because of the optimism, despite the lockdowns, the majority of the markets have reopened or they had some limited restrictions. So yeah, because a strong second quarter earnings season is expected, then the major US indices could find further support. Now, if you are asking me about the hourly chart, we need to see a break of the latest high, record high, which is of course this 41.36 level. So yeah, however, yeah, you can see that is in an upwards movement. Keep extending an upwards movement. So overall, remains to the upside, even though yes, you can see how strong the daily MACD is. RSI is about 71. Intraday is struggling a bit, is suggesting some kind of a correction, a small pullback intraday, but remains very positive. Nice to see you, my dear Obgona. Thank you for your nice words, dear Primo. Okay, very last question. I don't understand how to integrate fundamentals in my trading. I understand interest rates and etc., but I don't understand how to derive a direction from all of them. Okay, first of all, David, you need to clarify what you want to do. If you want to adjust, if you want to adjust the fundamentals in your trading, then it means that you are more of a long-term trader, daily, weekly, monthly. So fundamentals are mainly used from long-term traders. With this way, the long-term traders are emphasizing on fundamentals and are avoiding any noise, intraday noise, due to the economic data. Also, fundamentals, what do you mean by fundamentals? Is the US data strengthening a recovery for dollar? Yes. If that's the case, then US economy is like expanding, so dollar could appreciate in the long term. This is what the fundamentals, studying the back of each currency, the economy that is supporting this currency. Or if you are referring to companies, studying the financial reports of each company in order to see whether it will extend in the future or not. But don't try to stick on the fundamentals if you are a scalper or if you are an intraday trader. Intraday traders, so people that are trading 4-hour candles, 1-hour candles, 30 minutes candle, 15 minutes candle, they pretty much emphasizing, or they should emphasizing on what the charts are telling them, what the price action is telling them, what the momentum indicators are telling them. So you need to separate these two terms. Are you a scalper? Are you a price action trader? Are you a trade trader? Are you an intraday trader? Are you a long-term trader? You need to clarify these things and trying to um, adjust the strategy that suits your personality and suits the um, the time zone, the time frame that you want. So if you want to emphasize on fundamentals, then you should stick on higher time frames, such as daily, even weekly or monthly. Okay, hopefully I replied to your questions. Um, it will help you seeing some of our latest webinars. For since you're saying that I'm clearly an hourly chart trader, so have a look on the webinars that we have posted uh, with intraday strategies, trading journal, or there is a very good one from Stuart called the 5 and 9 um, strategy, exponential strategy, or scalping strategy. There is a webinar for scalping strategy, and so on and so forth. Okay, these webinars will help you if you are an intraday trader. Thank you all for attending my live analysis. Hopefully I managed to help you. I'm an hour and a half live. I'm a bit run out of steam like the markets. So I need to call it a date. Okay, hopefully you enjoyed. For anything else that you need, you can either find me, you can either contact me in the Facebook page, the Messenger Hot Forex Facebook page, and the marketing team will let me know, or Instagram Hot Forex Instagram channel as well, or directly to webinars at hotforex.com is an email that only me and Stuart handling. So I will be able to reply you, either me or Stuart, whoever is available, with any questions that you want. Not only for webinars, but in general for any help that you need. Thank you very much for attending our live analysis. Take care. It's an early season. Take care of the news in regards to virus, geopolitics, because you have seen today that the markets have ignored the inflation and they focus on the Johnson Johnson news. Like my friend over here, my friend Syed mentioned. I didn't know about Johnson Johnson until I checked my headlines. So you have seen how the markets could proceed in a weird reaction from the data because they emphasize on the latest news. So take care. Tomorrow is retail sales, a key event again, but keep an eye on the headlines. Keep an eye on geopolitics, US China restrictions, or any kind of trade war, virus development, and so on.